here's 3 best ETFs for long-term investing, where I'm going to be comparing the likes of SCHD versus VOO versus JEPQ to see which ETF is truly the best to hopefully make the most amount of money in the long run. For some background knowledge, SCHD is one of the most popular dividend ETFs offered by Charles Schwab, often regarded as the king of dividend ETFs, where it invests in high-quality dividend-paying companies. Up next, we have VOO. Now, VOO is one of the most popular S&P 500 ETFs offered by Vanguard, and this one invests in stocks in the S&P 500 index, representing 500 of the largest US companies. Lastly, we have JEPQ. Now, this one is a very interesting ETF that is a covered call ETF to be exact, where it delivers monthly income in the form of dividends and NASDAQ 100 exposure with less volatility, and this one is offered by JP Morgan. So with all that out of the way, I'm going to be using a scorecard to keep track of each ETF's dividend yield, dividend growth, expense ratio, diversification, risk, reward, and simplicity. If the ETF wins that category, it will be awarded a green check mark for a point or a red X for no points. And at the end of the video, I'm going to be scoring up each ETF to find out their final score and to find out the winner of this video of SCHD versus VOO versus JEPQ. So be sure to stick around for that. Now, without further ado, let's get started. The first category is dividend yield. Basically, the dividend yield is how much a company annually pays out its dividends to shareholders relative to its stock price. Dividend yield is super meaningful for investors seeking out to live off that dream of living off of dividends or passive income. VOO has a dividend yield of around 1.3%. JEPQ has a dividend yield of around 9.7%. And SCHD has a dividend yield of around 3.5%. With this category of dividends, it's a no-brainer that JEPQ has the highest dividend yield out of all 3 ETFs and gets awarded the first point on the board for this category. The second category is dividend growth. Dividend growth is when a stock or ETF increases its dividends over time, which is really important for your future overall returns. VOO has a dividend growth rate over the last 10 years of 7.19%. SCHD's dividend growth rate over the last 10 years is 11.13% of double digits. And JEPQ's dividend growth is negative over the last trailing 12 months. No hesitation, SCHD definitely gets its first point on the board for dividend growth. The third category is expense ratio. The expense ratio is the cost of owning an ETF. In short, the lowest expense ratio is going to be more preferred than a higher expense ratio. VOO has an expense ratio of 0.03%, an A+ by Seeking Alpha. SCHD has an expense ratio of 0.06%, another A+ rating by Seeking Alpha. And JEPQ has an expense ratio of 0.35%, a solid B rating by Seeking Alpha. Out of those 3, VOO has the lowest expense ratio, so it will get its first point on the board for this category. Up next is diversification. Diversification is super important if you want to have the best chance of capturing the best returns in the long run with hopefully the lowest amount of volatility along the way. And more diversification should mean that you should sleep way better at night. VOO has 500 different companies from a super wide range of sectors in the stock market. SCHD has around 100 different companies from also a pretty wide range of sectors. And finally, JEPQ has around 100 different companies, mainly tied to the technology sector or the NASDAQ 100 with other sectors as well. Most people will hopefully agree with me on this one, that VOO has the most amount of stocks as well as the most amount of sectors to keep you diversified. So with that in mind, VOO does get a point for the diversification category and wins this category. Up next is risk. Risk really depends on your goals because everybody has their own risk tolerance, but usually the more amount of risk you take means the more amount of money you could potentially earn, but also the more amount of money you could potentially lose, and vice versa. I'm going to use beta to measure the amount of risk or volatility of an ETF. In finance, beta is a metric that measures how volatile a stock is compared to the overall market. A beta of 1 means the market's beta is always a 1. A beta greater than 1 means the stock is more volatile than the market, thus more risky. And a beta less than 1 means the stock is less volatile than the overall market, thus being less risky. According to M1 Finance, VOO has a beta of 1, SCHD has a beta of 0.85, and JEPQ has a beta of 0.83. So JEPQ has the lowest beta, so it means it has the lowest amount of risk and volatility. Probably because you do have that high dividend to act as a cushion against any losses. However, I'm also going to give a 0.2 SCHD because they have a very close beta, and SCHD definitely is a low risk ETF compared to a growth or a broad market ETF. So it's unlikely that you're going to lose a ton of money, even that much at all, in the long run. So with all that in mind, I'm going to give both these ETFs a point on the board. Next, we have total returns. Total returns of an ETF is its share price appreciation or gain plus any dividends earned. I usually like to compare an ETF's returns over a 10-year time frame just to get a more accurate picture of an ETF's overall returns. However, JEPQ has only been out since 2022, so it's going to be automatically defaulted out of this one and disqualified, but VOO has the highest returns out of all 3 ETFs, followed by SCHD in second place and JEPQ in third place, and the same is true over the last 5 years of returns as well. So VOO gets yet another point for its overall returns as well. Lastly, we have simplicity. Simple is always better. Now, simplicity means that the ETF can stand alone as a one ETF portfolio, the core of your portfolio, or the majority holdings of your overall portfolio. Now, I know we have our own preferences, but VOO is for investors that are more passive long-term investors who want market matching returns, while SCHD is more for those long-term passive income investors who are more dividend-oriented investors. And JEPQ is more for those ultra-aggressive high dividend yield investors looking for the highest dividends possible in their portfolio. I'm going to be biased on this one and give a point to both SCHD and VOO on this category, since I prefer non-covered call ETF strategies from a tax perspective, and VOO and SCHD are great because they have diversification and great long-term potential growth in the stock market. So after tallying up all the scores for this ETF battle, JEPQ comes in third place with a grand total of 2 points. SCHD comes in second place with a grand total of 3 points. And in first place is your winner of this ETF battle, that is VOO by Vanguard, coming in with a grand total of 4 points, so congrats to this amazing broad market ETF. Now, I do own both VOO and SCHD in my over $130,000 ETF portfolio, so it might be a touch biased on this ETF battle. But if you want to see my entire ETF portfolio, check out and download the Blossom app for free when you click the link in the description of this video or in the pinned comment below. Blossom is an amazing social media investing app that gets to show you every ETF in my 3 different ETF portfolios for my 3 different investing accounts. I get to show you whenever I buy or sell an ETF, whatever posts I make, and if you do give me a follow on Blossom, I will give you a free follow back, and you can message me there anytime with any ETF questions only on Blossom. If you guys like this video, please give it a like because this cute puppy did. Right here's going to be a video on another ETF battle of SCHD versus VOO versus QQQ. And right here's going to be a video on another ETF battle of VOO versus VTI versus VT. I hope you have a great day, continue to crush in the stock market, and take it easy. Peace.